Hello friends, welcome to our channel SNK and Company. Let us discuss the income tax, GST, and corporate law updates for the week ended March 22, 2026. We begin with the Income Tax Act. The Calcutta High Court, in the case of Vishnu High-Rise Pravidit Limited versus Union of India, held that where reassessment proceedings were initiated based on a third-party statement recorded under Section 132(4), non-provision of an opportunity for cross-examination at the stage of Section 148A did not invalidate the order passed under Section 148A, D. The court observed that cross-examination becomes relevant only when such statement is relied upon at the stage of passing reassessment order under Section 147. The Mumbai Tribunal, in the case of Bharat Kumar Gadodia versus ACIT, held that where the SSC, being a regular investor, had carried out purchase and sale of shares through recognized stock exchange using banking channels, supported by documentary evidence such as DMAT statements and bank records, and no material was brought on record linking the SSC to any price manipulation, addition made under Section 68 as unexplained cash credit was not sustainable and was liable to be deleted. The Bangalore Tribunal, in the case of Bilashaival Madana Govardhana Murthy versus Deputy Commissioner of Income Tax, held that where agricultural income was declared by the SSC and ownership of agricultural land was not disputed, and no contrary material was brought on record to establish absence of agricultural operations, such income could not be treated as income from other sources merely due to non-production of documents relating to earlier years. The tribunal also noted that agricultural income had been accepted in prior years and no incriminating material was found during search. The Mumbai Tribunal, in the case of Mukesh Vasant Kumar Chandan versus Income Tax Officer, held that where the SSC, engaged in the business of building and development, had sold a flat at a price lower than stamp duty value and declared income under Section 44 AD by adopting stamp duty value as turnover, any further addition of the same differential amount under Section 43 CA would result in double taxation, which is not permissible under law. We now move to updates under GST law. The Bombay High Court held that where a GST-registered proprietor dealing in metals and scrap was subjected to search and cash amounting to 1 crore was seized without recording reasons as required under Section 67. 2. And no notice was issued within 6 months in respect of such seizure. The action was arbitrary and unsustainable. The court directed the authorities to release the cash along with applicable interest. The Allahabad High Court held that where a law firm claimed refund of input tax credit on export of services and the appellate authority, despite finding that export conditions were satisfied, remanded the matter to the adjudicating authority for redetermination of place of supply. Such remand was without jurisdiction. The court observed that the appellate authority does not have the power to remand and accordingly directed that the appeal be decided on merits within 2 months. The Andhra Pradesh High Court held that where a registered dealer had filed a manual appeal after making the required pre-deposit and the appellate authority had accepted and heard the appeal on merits, the appeal could not subsequently be dismissed solely on the ground that it was not filed electronically as required under Rule 108. The court held that such technical objection cannot be invoked after the appeal has been entertained and accordingly set aside the dismissal, remanding the matter for decision on merits. We now discuss updates under other corporate and enforcement laws. In the case of Viraj Singh Kuntal versus Deputy Director, Directorate of Enforcement, FEMA, New Delhi, held that where the appellant was found to be in receipt of proceeds of crime exceeding 20 rupees lakhs arising from fake call center operations and failed to establish a lawful source for the amount recovered, initiation of proceedings under the Prevention of Money Laundering Act and confirmation of provisional attachment were justified. The Delhi High Court, in the case of JM Financial Asset Reconstruction Company Limited versus Deputy Director, Directorate of Enforcement, held that territorial jurisdiction under Section 42 is to be determined based on the place where the aggrieved party resides or carries on business. Since the appellant was situated and operating in Mumbai, the Delhi High Court held that it lacked jurisdiction to entertain the appeal, notwithstanding that the appellate tribunal was located in Delhi. These were the key updates under income tax, GST, and corporate laws for the week ended March 22, 2026. Stay connected for more updates on important legal developments.